Previously, there were murmurs of doubt and shadows of uncertainty, but statistics speak for themselves, and the most recent data has given a fresh perspective on an outdated viewpoint. Today, we dispel falsehoods and reveal Tesla's true worth. In this video, we're dissecting Tesla's market maneuvers and innovation acceleration and explaining why, in the midst of a heated price war, it might be time to boost your portfolio with Tesla stock. The undervaluation of Tesla indicates a... Before we begin, please remember to hit the like button, subscribe to Tesla Stock News, and smash that notification. Buy in a market that is playing bumper cars with pricing. Let's change gears and find out more. Stay tuned as we charge ahead into the electric avenue of Tesla's market dynamics. Right here on Tesla Stock News, Bell. Let's get started. In January 2020, the globe was on the verge of the COVID-19 epidemic. A fascinating discussion between two investors about the future of Tesla Inc. turned out to be both prescient and incredibly misguided in retrospect. As viewers may remember, in the third quarter of 2019, Tesla shocked the market by announcing a quarterly profit of $143 million, marking the first time the signal was obvious. At the core of Tesla's story was a business on a spectacular ascent, with its stock value skyrocketing to $1,450 following two consecutive quarters of success. The company had entered the bet era of profitability that was to redefine its market performance. Pre-split adjustments provided the setting for a daring bet against the odds that questioned Tesla's ability to surpass the $700 threshold by the end of Q1 2020. The bet understated the automotive titan's electrifying potential, and it wasn't just a test of Tesla's market performance, it was also a litmus test for the future of mobility. The bet was placed in the midst of a world that hadn't yet been shaken by the unexpected global event that was CO-19, which would test the minds of economies and businesses alike in an unexpected twist. Within that quarter, Tesla's stock price almost hit the $11,000 mark, drastically exceeding the projections of market analysts. This result served as a sobering reminder of the stock market's unpredictability. Even the wise investor Warren Buffett gave up the distinctiveness of Tesla's path by withdrawing from the unstoppable power of Elon Musk's leadership and selling up electric vehicle manufacturer by Company Limited since that pivotal wager. Tesla has set out on a remarkable journey, consistently providing its investors with returns that significantly outpace typical market increases. This beloved viewer serves as an excellent example of the value of flexibility and creative thinking in the field of investment principles, which occasionally call for us to question our long-held beliefs in order to achieve success from modest beginnings to a powerful market presence. By the second quarter of the fiscal year 2023, Tesla's journey exemplifies the traditional zero to hero narrative in the business sector. The electric vehicle industry accounts for a portion of Tesla's astounding $21.3 billion in revenue. This historic early days revenue shows an incredible surge of 3,946 each year since 2013, averaging out to an annual growth rate of roughly 395, reflecting Tesla's early days. The story was radically different. The venture was on the verge of going bankrupt due to financial instability and an excessive reliance on government assistance. A pivotal moment occurred in 2008 when CEO Elon Musk disclosed the company's near bankruptcy, highlighting the risky route startups frequently take. This precarious start is evidence of the volatility inherent in the early stage of a business. Ventures emphasizing that a company's promise by itself does not shield it from the risk of failing in the face of overwhelming odds. The story of Tesla didn't end there. Through perseverance and unwavering innovation, the company drastically changed its fortunes, reporting an operating income of over $13.7 billion by the end of 2022, with an operating margin of 16.8%. This number not only demonstrates profitability, but also leadership in the auto industry. Now, let's turn to the larger EV market. In 2020, EVs made up just 2.2% of the US auto market. By the end of 2022, that percentage had more than doubled to 6.1%. Analysts now predict that this percentage will rise to 8.5% by the end of 2023. But there's a bigger picture. In the first half of 2023, the worldwide EV market accounted for 16% of all light vehicle sales, a startling 49% increase. This trend is not just a fleeting phase. It is expected to pick more steam as more nations integrate electric vehicles has become a battlefield of titans, with industry heavyweights like Volkswagen, Ford, Stellantis, BMW, and Mercedes-Benz fighting for supremacy alongside numerous up-and-coming businesses in the constantly changing landscape of market shares due to advanced policies restricting sales of conventional combustion engine vehicles. Despite a minor decline from its 22% peak in the first quarter of 2023, Tesla still holds a 20% lead. This shifting ground can potentially price war ascribed to escalating costs. To put this into context for our audience, auto manufacturers frequently sacrifice profit margins in order to gain consumer attention. As of August, the Tesla Model 3 was the best-seller EV in the US, but its transaction price had dropped 21% year over year. Other models were also cutting pricing to remain competitive. Despite these aggressive pricing tactics, Tesla has a distinct edge thanks to its direct-to-consumer sales strategy, which bypasses traditional dealerships and gives the company more control over its pricing strategies and reduces additional costs, keeping it nimble in comparison to its rivals. Though Elon Musk has noted that the company's current focus is on increasing sales rather than profit margins, and that future profitability depends on the success of its highly anticipated full self-driving software, Tesla's market share is still strong, demonstrating its strategic acumen. However, even though Musk is known for taking risks that defy expectations, this sales before profits approach is not always advantageous to investors. What about the global scene? Europe is now the second largest market, but in the first half of 2023, China overtakes Europe as the industry titan, accounting for 55% of global EV sales. It is crucial for our viewers to understand Tesla's foundational role in this industry, a distinction that has given the company significant competitive advantages over newcomers. First, let's highlight Tesla's technological prowess. With its significant investments in battery innovation, the company is at the forefront when it comes to cutting-edge EV technology. Tesla secured the majority of EV sales in China with a 21% market share, but maintained a close chase at 15% amid the fierce competition within the EV market. Tesla stays at the forefront of EV technology and consumer preferences thanks to its vehicle's remarkable range, quick charging times, and unparalleled performance. Second, by controlling its supply chain, especially in the production of batteries, Tesla's vertical integration strategy is a model of operational efficiency. The company not only reduces costs, but also upholds a stringent quality control that is difficult to match. This smooth integration enables quick design updates, which boost efficiency and lower production costs. Thirdly, Tesla is frequently seen as a trailblazer in the field of autonomous driving thanks to its sophisticated driver aid systems and abundance of data to improve its algorithms. In the pursuit of a future with completely autonomous driving, Tesla stands out as a leader. Finally, take into account the Tesla supercharger network, a constantly growing network of electric vehicles that greatly reduces range anxiety for owners of electric vehicles. This network strengthens the brand's standing in the market and increases the desirability of Tesla's vehicles. Although it currently depends almost entirely on EV sales, viewers may find it intriguing that Tesla is methodically expanding its horizons and directing its technological strength into a variety of commercial avenues. In a world that is desperate for clean energy alternatives, the market for these technologies is enormous. At the same time, Tesla is leveraging its leading edge battery technology to enter the energy storage market with the Powerwall and Power Pack. These innovations are more than just products, they are a lifeline during power outages and a beacon for sustainable off-grid living. The energy sector is a flurry as Tesla expands into the field of solar energy solutions, rolling out products like solar panels and the innovative solar roof technology. Let's go on to valuation now, with its future price to earnings ratio resting at 74.4 times its projected FY24 earnings. Some may object to the idea that Tesla is discounted, but context is key when compared to Tesla's historical 5-year average forward PE of 119 times. In addition to the significant discount of more than 37% represented by today's valuation, the forward enterprise value to EBITDA ratio currently stands just below the 5-year average, indicating a 5% discount. It's wise to keep in mind that these values contribute to an anticipated decline in Tesla's earnings per share for 2023, which is driven by the competitive pricing environment in the EV market. However, a market correction supporting margin recovery is anticipated in 2024. Based on a discounted cash flow model that incorporates analyst consensus from sources like Seeking Alpha, Tesla has continuously raised the bar for industry margins, with projections indicating that these will rise from an estimated 11% at the end of 2023 to a solid 20% by 2032, marking an annualized growth trajectory of 38%. Sales are expected to reach the $480 billion mark by 2032. By the same year, this model projects an EBIT of $96 billion. What implications does this have for investors? Today, Tesla's projected fair value is $324 per share, which is a significant undervaluation of around 29% in comparison to the current price of $253. Investment thesis. For those looking to the long-term horizon, the investment thesis remains strong despite possible short-term volatility, including reactions to the next earnings report. Despite its relatively recent profitability, Tesla has already generated a sizable amount of free cash flow, demonstrating an astounding revenue growth of nearly 3,000 years over the last 10 years. The company's journey from the verge of bankruptcy in 2008 to becoming an EV trailblazer is nothing short of remarkable. Crucial indicator of investment viability, and as the EV market grows, the resulting pricing war is shaping the future of the sector in this environment. In addition to solidifying its market position, Tesla's cutting-edge EV software, superior battery technology, and extensive charging network also portend a potential growth trajectory. Conclusion: taking into account our in-depth analysis of Tesla's current position and prospects, from its creative shift into solar and energy storage solutions to its valuation that screams opportunity, concludes that despite fierce competition, investors with a long-term outlook may find Tesla to be a compelling addition to their portfolio. The company's stock price currently represents a 29% discount to fair value. Despite heightened competition and a complicated market environment, Tesla continues to navigate the turbulent waters of the EV market with its distinctive blend of innovation and strategic insight. Tesla may be able to sustain its market leadership thanks to its technological edge, diversification, and efficient production techniques. Encourage strong growth in the upcoming years with a fair value estimate that is far higher than stock price as it stands now. What do you think of Tesla's market strategy? Is the possible undervaluation a good reason to buy? Or do you believe the competition will make Tesla's prospects less promising? Tesla's investment potential is bright for those who are patient and have their sights set on the long-term reward. Please leave a comment below with your thoughts on how you balance the risks and opportunities when thinking about adding Tesla to your portfolio. If you thought our analysis was insightful, don't forget to hit the like button and make sure you subscribe to Tesla Stock News. Thank you for watching, and we'll see you in the next one.